Well, one stock that was volatile in trade was definitely Yes Bank. That stock tanked in the last hour of trade after it disclosed the outcome of the board meeting held today. Now, the bank has finalized a non-executive chairman, a part-time non-executive chairman for the board, and will be seeking RBI approval for the same. Ritu Singh's joined in with more details. Ritu, of course, they had this board meeting, but no clarity really emerging. No names have been disclosed.
Absolutely, and I think that's the reason why the stock is being punished in trade. The markets were expecting some sort of news, some developments on the CEO selection front, on the chairman front, on the appointment of the independent director, none of which has been disclosed to the public so far. What we do know is that the bank has said that they have decided on who the part-time new chairman would be, and they will now seek RBI's approval for the same before the appointment is really made. But yes, so far, although the nomination and remuneration committee has shortlisted candidates for an independent director post, they haven't really finalized or come down to one single name, and that is yet to be decided. The other thing is the search and selection committee meeting. Yes, they keep indicating that it is in the final process. They would be shortlisting names very soon. Due diligence has been on, but the fact is now, what we were expecting is that the three candidates would be ratified by the board today and thereafter sent to RBI for the final approval, which also takes some amount of time, for the RBI to go through the three candidates and to give the final name. But now we understand that the next board meeting will be held in the month of January, 9th of January, and it's only after that that the shortlist would be submitted to the RBI for their approval, and this is cutting it very close with just 3 weeks left for Rana Kapoor to vacate office. So I think that is all of this combined is really not sent out a very good signal to the markets, which is why we're seeing the stock reacting like that. But yes, definitely some more clarity was awaited from Yes Bank.
Oh, well, yes, uncertainty continues when it comes to Yes Bank. That's the reason the stock tanked around 11% off the day's high today. And all eyes will now be on the Jan 9th board meeting, where it is expected the name of the part-time executive chairman, non-executive chairman, that is, would be decided and announced. Moving on then, Ujjwala maker Jyothy Labs is all set to make a splash in the Ayurveda space in summer of 2019. Sources tell CNBC TV 18 that the company is also exploring an acquisition in the Ayurveda space to expand its range of products in the naturals portfolio. CNBC TV 18's Priya Sheth has the details. Priya, run through the details. What exactly is the strategy when it comes to the Jyothy Labs in the Ayurveda space?
Well, to achieve a revenue target of 500 crore rupees in the personal care segment by 2021, we do understand that Jyothy Labs is embarking on an aggressive Ayurveda strategy. Now, this strategy includes both the organic as well as the inorganic routes to capture a large part of the Ayurveda market. Now, to begin with, the company will be launching face wash as well as hand wash in summer 2019, and several variants of these will be rolled out starting April-May 2019. They will begin with launches in South as well as East India before moving to a pan-India launch. Now, several of these products will be manufactured out of the Guwahati facility, and the company expects to generate an additional 100 crore rupees through these new launches in FY20. Now, we also do understand that the company is looking at making an acquisition in the Ayurveda space, specifically with regards to a Kerala-based company. The company perhaps may look at entering the hair care segment, which includes herbal hair oil, where a company feels that it could have a significant growth potential in the Ayurveda market. In fact, the company is also looking at introducing more variants to grow its Ayurveda pie to achieve its 500 crore rupee target by 2021. In fact, we did reach out to Jyothy Labs, and the company has confirmed that they hope to launch new products in the Ayurveda portfolio by summer 2019.
Thank you, Priya, for that. But moving on to the next CNBC TV 18 exclusive then, sources tell us that the government is pushing for a 5 kg LPG cylinder under the Ujjwala scheme in order to increase consumption in rural India. Anshu Sharma joins us with the details. Anshu, over to you.
That's right, 2019 is the year for national election, and the oil ministry is pitching for increased sales of 5 kg LPG cylinders, especially under the scheme Ujjwala. Now, the idea is to bring in affordable LPG connection and refills for the rural India. Oil marketing companies have already organized over 21,000 special camps for pushing 5 kg LPG cylinder, and the result in the last 2 months have shown that over 1 lakh customer opted for 5 lakh cylinder, and over 1.4 lakh refills were sold by the oil marketing companies. Now, the average per capita consumption nationally is about 7 refills, and under Ujjwala, it's close to 4.3 refills per household. The idea is to increase consumption in the rural India. The government is not only pushing for refills and booking, but also looking at ways to expand connections and refills. Government is looking at WhatsApp and missed call services. We understand that Oil Ministry has been in talks with WhatsApp, but some modalities need to be fine-tuned by the oil marketing companies. Now remember, Ujjwala has a target of about 8 crore households which have to be connected, and it's a big task, and considering that elections are coming in the next year, the push is bigger one. Back to you.
Thank you, Anshu, for that. But moving on to exclusive now, and the news just coming in, and you can see the flashes on your screen. TDSAT, that is the Telecom Dispute Settlement and Appellate Tribunal, has directed TRAI to reconsider the predatory pricing norms within 6 months. Ashmit Kumar joins us with more details. Ashmit, good afternoon. A breather coming in for some of these telecom companies then?
Indeed, and primarily for the incumbent players, that's Bharti as well as Vodafone Idea combined. Now, keep in mind that in February this year, the TRAI, the Telecom Watchdog, had come out with quite lengthy and specific provisions with respect to predatory pricing. However, it had met with a fair bit of criticism and, of course, the legal challenges as well, primarily on 2 counts. One was the definition of what constitutes a significant market player. The predatory pricing provisions would kick in only for players which constitute a significant market player. The criticism by the incumbent players was that the benchmark has been set too high for players such as Reliance Jio, and that they will never qualify for predatory pricing, and that they would be exempt by virtue of their not qualifying as a significant market player. This was the first criticism. The second argument against predatory pricing was the reporting mechanism that TRAI had sought to bring in. The argument against that essentially was that various segmented offers are made by telecom providers to a whole set of customers, that other than the fact that this would cause compliance burden, this was also what telecom companies argued was a trade secret and was commercially sensitive and needn't be disclosed to the Telecom Watchdog. Now, on the back of all of these concerns, what we understand is that the TRAI has struck down the TDSAT, I beg your pardon, has struck down the TRAI's provisions for predatory pricing. TDSAT has in fact also sent it back to TRAI for TRAI to reconsider on their predatory pricing provisions and to come back in about a 6-month period. So that's the window that the TDSAT has given. So clearly, with predatory pricing, norms have been struck down, we believe, coming in for Vodafone and Bharti.
Okay, Ashmit, thank you so much for getting at that information. We will watch out for the telecom stocks tomorrow in trade. But let's get in some market opinion on that note. Earlier today, we caught up with Sridhar Sivaram, the investment director at Inam Holdings, to get his views on the appointment of new RBI governor, as well as his take on the NBFC space. Take a look.
I do believe there is a lot of room for monetary easing, and I hope that some of that comes through. As a house, we are long financials anyway for many other reasons. Now that even the new governor is sort of indicating, and even the previous governor indicated that there could be room. I mean, we're at 2.3% inflation, and it isn't looking as if for the next 6 months we are getting to 6 or something. It is going to be in the range of from here to 4. So why are we so tight? I really don't know. So I leave it to the judgment of the experts here, but I do believe there is room. So financials is a good space.
NBFCs, the entire space is what you're cautious on, especially housing finance companies.
Yeah.
Is it to do with the liquidity pressure that we've seen, or what are you worried about?
I think there is a lot of NPA sitting in HFC books, especially in these two categories.
That would be true of NBFC also, no?
It will be true for NBFC. My only reason for HFC is that there is some oversight of RBI as far as NBFCs are concerned. For an HFC, it is NHB, which we know is a very weak regulator. So the good thing about banks is that the banks have got cleaned up today. And you go back 3-4 years, we always used to say adjusted book because we never believed in the NPA. Now that is like 90% we would know is known, is very well known. That is not the case with HFCs and NBFCs, and particularly HFCs because the regulator is very weak.
So are you expecting a lot of builder loans to blow up? I mean, is that the other part of the market that could be under pressure, the real estate space? Because we keep hearing about a big crunch in liquidity over there.
There is a big crunch in liquidity. And even for NBFCs, there is a crunch as far as liquidity is concerned. The rates have gone up. The securitization rates have gone up by 200 to 300 basis points. Nobody will come and say on the channel, but when you actually go and meet these NBFCs, so they are having significant issues on liability side. We will see the impact of that when we see the third quarter results. So there is an issue. So I really don't I'm not in RBI's camp that there is no issue. There is an issue, but I hope that the issues are resolved along with some sort of AQR, which will be the best for the industry.
Okay, so outside corporate banks, what else is good? Would you go with the capex cycle? Yesterday IIP numbers were good, L&T numbers were good, Cummins was good. Is that the other one you're looking at? And consumer, if rates are falling,
so, yeah.
Who else benefits?
So consumption is a theme because typically closer to the election we do get some increased spending by the government. Also, election itself is a large spending event. Keep in mind that on an average, every individual candidate who spends at least 20 to 40 lakhs minimum, and in high profile it's even higher. Just keep multiplying that. So the velocity of money typically increases, is substantially, it goes up. So I do expect that consumption will improve from here.
Let's take a look at the commodity space now, where you have the gold prices trading very flat. But remember, it is the 2019 forecast that catch your eye, because we have seen most people tell you, whether it's banks and brokerages, that the gold prices will continue to outperform in 2019. The best that we seem to be hearing really is $1,350 per ounce on the higher side in the next year there. But what is even more interesting is the central bank buying that we have seen in 2018, which is at the fastest rate since 2012. And that really includes India as well, because the last time the Indian central bank bought gold was in 2009. And this time around, we've seen some buying come back yet and again. And that, of course, is the data on how 10% of on-ground gold really is being held by the global central banks. The RBI, as of now, where we stand after October buying, holds 5.7% gold in its reserves, which is at 586.4 tons. Much less than many other countries, and that should really come up on your screen, because we've seen central bank buying quite huge from Russia, Turkey, Kazakhstan, Iraq, etc. in this year. And that really is the final data that has been released today, saying that the total global central bank gold reserves now stand quite strong. In US, those are at 73.8% of their forex reserves. Remember, India is just 5.7% in comparison to that. ECB holds gold 14.9% in its reserve, and that pretty much is the case when you look at Russia, most of these Middle East countries, European countries, even China, of course, has been buying at a very fast pace when you look at in 2018 when it comes to adding gold to its reserves. So clearly it has been the central bank buying of gold in 2018. That is a number to keep an eye on. Colin Shah, Vice Chairman of the Gems and Jewellery Export Promotion Council, now joins us to talk more about that. Colin, hi, thank you so much for joining us. What has been your sense on what gold really did in 2018, and how are you reading this central bank's pattern around globe, where gold really has been a very strong, asset which they really have included in their reserves?
Gold, like we know, Manisha, is a safe haven, and central banks globally have invested in gold whenever they feel there is too much volatility in all kinds of markets, whether it's currency or commodities. And I think even the RBI is, finally, after many years, like you correctly said, has bought 8.5 tons of gold in this last financial year, because they've had little choppiness, whether it's the rupee, whether it's the political scenario, and, especially post-implementation of GST, where we've seen all kinds of volatility even in the domestic market. Having said that, 2019 in India has a record number of auspicious days and record number of weddings after 5 years. So gold prices are expected to go up by between 5 and 10% in dollar terms in 2019. And if that happens, then it's a good investment even from their point of view, besides it being obviously a safe haven. So as trade, we think that's been the fundamental reason why RBI has been buying gold in the last 12 months.
Colin, also, what is your sense on the kind of numbers that we are working with in sense of trade? How are you reading the current quarter? How has the demand been? Because this is the quarter that matters the most to the Indian gold and diamond industry, the jewelry industry as per se as well. How has the festival and the wedding season combined been until now?
Post Dhanteras, the season has been positive. We again enter a period of inauspicious days next 2-3 weeks. So we'll see a slight drop in consumption over the next 2-3 weeks. But 15th Jan onwards till the end of March is again auspicious days and should have a strong, demand situation.
So if you compare it to last year or a quarter-on-quarter basis, what is your sense on a percentage increase, even if you can throw a vague number really?
See, our imports have dropped. Okay, so I guess this at the end of the year, the import should be between 5 and 10% less compared to last year.
Okay.
But rupee devalued, so in terms of value, we should be flattish compared to last year. But I think just in terms of consumption, we should be 5% below the consumption last year. But that's even a function of GST being implemented in totality this year. So, we had demonetization, we had GST. So there was obviously a lot of, cash in the system a few years back. So we won't have demand at that same level this year and next year. Till markets come up another, So we'll have value-wise flat or same growth. But in terms of volume, quantity, it will be below, I guess, what we...
And why would you say that?
Because, the whole economy has become official, GST implementation, demonetization. There's no excess liquidity in the system today.
Okay. Okay. All right, Colin, we'll let you go at that. Thank you so much for taking your time out. So that really is the view coming in from GJPC. They expect a 5 to 10% increase in demand going forward, and that is what they expect in prices as well. But as far as the imports are concerned, well, that of course seems less than 2017 as we're approaching end of 2018. T. Gnanshekhar, our director at Comtrends, as well joins us today in our studios. Gnanshekhar, thank you so much. Seeing you in studio after a very, very long time. But what is your sense? How do you look at the gold prices and demand going forward?
Yeah, I think we're clearly, inversely correlated with the dollar. So looking at that sense, and with the potential for the dollar to fall in at least in the first to second quarter, clearly gold is going to be in favor, and we're going to see strong prices at least from the international front. So if dollar were to get weaker, which means dollar rupee also could strengthen. So the potential for it to domestically appreciate much could be subdued. So we're sort of seeing it in a bullish trend, but then sort of a contained movement is what we expect. Maybe somewhere towards 35,000 is where it could get capped, which will be around $1,350, $1,360 in the international markets.
So price-wise, you're saying we might see an increase in gold prices, but as Colin was pointed out, the jewelry demand in the Indian markets is not seen very bullish. Would you say it is the investment demand that finally is picking up now? Absolutely.
I think the jewelry demand, like the guest rightly pointed out, is having problems not only in its usual physical demand that takes place. I think the investment demand will certainly pick up in the coming year and the years to come, because we're having lots of uncertainties and a very, very unsure equity markets going forward. So in the last year or so, or even before that, I think gold did not perform as a safe haven. I think that trend could potentially change in the coming year. We could see allocations into gold. So in that sense, I think the investment demand will more than compensate for the loss in jewelry demand.
The crude oil prices has been yet another mystery. We've seen very, very volatile moves come in for that one. How are you looking at that? Would you say a bottom is made? Because with the 2019 forecast that seem to be coming on board, 65 to 70 really seems to be a synonymous choice.
What's so surprising is, there's been no follow-through buying post the announcement. And, that only gives me kind of a feeling that there is some more downside to this market before we see any kind of a sustained up move. What we also should realize is there has been a huge buildup of long positions based on the Iran problems earlier, and some of the hangover of those long positions still there, and we're nearing the year end. So I guess there is some more pain in crude, and probably we should be looking at $50 odd in NYMEX. Which could be close to where Brent is at this point in time. So I don't see too much of a downside either. It could be well supported at lower levels because there is potential supply issues if prices start going down. So a limited downside and a potentially good upside in the coming quarters because of the possibility of supply problems.
All right, that's the view really coming in for precious metals and crude. Gnanshekhar, thank you so much for coming by and helping us make strategies for our viewers. With that, it's a wrap up on this edition of Closing Bell. After the bell comes up next.